Good evening, everyone. All right, so tonight what we're going to do is internal controls and also bank reconciliation. The importance of internal controls. Why do we need them? And the internal controls are due to having, so there's something called a fraud triangle. And the fraud triangle made up of three things: pressure, justification, and opportunity. And so what this means is, let's say that someone is working and they are having financial difficulty. So that's the pressure, right? They not only receive checks in the mail for the company, but they also deposit them. So there's, you know, if somebody sends cash, there's an opportunity for them to pocket the cash and just make it go away. And then they feel justified because they say to themselves, well, I work really, really hard and nobody's given me a raise in 2 years, and my raises, even in the past, have been less than the rate of inflation, so I'm losing ground. And look at the bigwigs in this company. They're making millions. And, you know, management had a 7% raise, and we got a 1% raise 4 years ago, and yet management seems to vote themselves raises all the time. So that's the type of thing that we're talking about with regards to the fraud triangle. And it's you know, when somebody walks into Home Depot and they want to purchase something, but they're under financial pressure because they don't have a lot of money, and then they say, well, Home Depot makes so much money, and look at it, you know, they're just robbing us with the prices, and look, all the bolts are loose in a little drawer, and who's going to know if I put 2 of them in my pocket? And it's no big deal, it's such a small amount anyway. So this fraud triangle exists all the time for many individuals who are working for companies. But companies actually cannot change pressure, and they cannot change justification. Keep in mind, human beings are the only living creatures in the world that justify their behavior, and we're really good at it. The only thing that a company can control is the opportunities available for individuals in the company to steal. And so internal controls are put in place to reduce opportunity to the lowest level possible, so that the fraud triangle has difficulty working. Because if pressure and justification are there, but there's no opportunity, then actually fraud will be reduced, significantly reduced in a company. So internal controls are the things we put in place in a company in order to manage opportunity. Now, internal controls have become incredibly important. In fact, auditors, when they audit a company, now have to audit the internal controls. And this is connected to representational faithfulness, also called faithful representation, Chapter 2, Conceptual Framework. And I know I keep mentioning this, but I'm going to keep mentioning it anyway. The conceptual framework guides everything we do in accounting and in many ways auditing, but specifically in accounting. Auditors now have to check the internal controls, because if internal controls are strong, it means that faithful representation is most likely being followed. And don't forget, faithful representation is complete, free of error, and unbiased. And particularly with regards to complete and free of error, if we reduce opportunities for theft and fraud, then they will be complete and they'll be free of error. So internal controls are not just the business of the company, but if you're audited, it's the business of the auditors also. And you've got to think that the stronger the internal controls, the more likely that the auditors, when they choose a random sample to audit, that they're actually seeing a representational sample of what's happening in the company. So the importance of internal controls cannot be understated. They help a company ensure that the financial statements follow faithful representation. All right, excellent. So now, one of the things that is easiest to steal is cash. And I mean just cash. It's hard to steal a check because it's made out to the company, not made out to you, but it's easy to steal cash. So how can we, when we're looking at the cash account from the company, we might have a balance of, let's see, let's assume we have a balance of $7,190. That's our first question. So we might have a balance of $7,190, but where is the verification of that balance? How can we ensure that this number is complete and free of error? And the only way we can do that is to verify it to an external source. And the only external source we have is a bank statement. So a bank reconciliation reconciles our cash account on the books to the bank statement. Now, the bank statement, and when you look at a bank statement, you're going to see a big bank statement, right? You're going to see name, and then you're going to see a date, a description, debit memo balance, right? And down here, you're going to see for this next question, you're going to see 8833. So that is the ending balance at the end of the period on this bank statement. So the problem is, you'll notice the bank statement number and the book number are different, and they're different because of timing differences. They are never different for any other reason except for timing differences. So if we take into account all the timing differences, we should be able to calculate a common number between the two companies. If I pretend that the bank has recorded everything the books has and that the books has recorded everything that the bank has, I know it's not happened. I know there's timing difference. But if I pretend that everybody is on the same page, then the number at the bottom of the bank reconciliation should be identical. So that's error aren't timing. Errors are not timing. You're correct. So there is the errors between the two companies, but even then, if we find the errors, we can correct it. So it's still a matter of just finding them. It's not like they exist independently. We can fix them. And if the bank made an error, I can phone the bank and get them to fix it. So errors are not timing differences, but everything else is a timing difference. And that's the only reason there's differences. So what the bank reconciliation is trying to do is to take into account all the timing differences. Pretend that both entities have recorded everything equally, and if they have, the number at the bottom of the bank reconciliation should be identical. If it's not identical, then we know we can't verify the book number. So that's the purpose of a bank reconciliation, and it totally ties into internal controls. In fact, under IFRS companies and audit standards, companies must do a bank reconciliation at a minimum once a month. And many companies do them far more frequently because they have so many transactions. There's companies that do a bank reconciliation every single day. All right, so now let's look at a very basic bank reconciliation. We're going to do question number E, 7-8. We want to do a basic bank reconciliation so we can get familiar with the reconciling items, the things that one entity has recorded and the other has not. So in this case, we've got a company, and the name is, so we're going to actually do a bank reconciliation. Start with the company name. Now, a bank reconciliation is never published, so it's not like it gets reviewed by the users of the financial statements, but it still has a structure because it's always audited. So you do an appropriate bank reconciliation with a title and everything because you know that this is going to eventually be part of the audit file. So we've got the company name, bank reconciliation, and then we have the date at which point we do the bank reconciliation. So this is not year-ended or period-ended. It's not for a period of time. It's for 1 second in time, and this is July 31st, and let's assume it's 2018. So we start with this. Bank reconciliations have two formats. You can either do bank and books, which is what I do. I like them next to each other. Or you can do bank and then books underneath. I'm going to do them side by side. I prefer the side-by-side structure, but you can do them one after another also. It does not matter whether you do the books first or the bank first. It has no order. There's no order. There's no order to the items you list on the bank reconciliation except for your balances. So your cash balance per the bank, and this comes from the bottom of the bank reconciliation at July 31st. Remember, we said it was 8833. And then this is the unadjusted cash balance per the books. So this is the unadjusted trial balance. Remember, we did the unadjusted trial balance in Chapter 3. So this is an unadjusted trial balance, and the balance is 7190. Generally, a cash balance between the banks and the book is not the same. It's incredibly rare for it to be the same in a company, particularly because of checks that have been written. And companies are still the #1 producers of checks. So we're talking about hundreds of thousands of checks every single year. And that generally causes quite a bit of a difference between the books and the bank. All right. So now, what are the reconciling? And I'm going to change the color for a minute so I can highlight what I'm doing. So over here, I put all the items that the books have recorded, but the bank knows nothing. That's a general statement, all right? So every time I see something that the books have recorded, but the bank has not, that item is going to go on the bank side. So on the bank side goes everything that the bank knew nothing about and has not as yet recorded. So as you can imagine, on the book side, it's all the items the bank has recognized or recorded, but the books knew nothing about. So those are always reconciling items. One entity knew about it and the other entity knew nothing. So let's go through these items. Because again, the purpose of this is just to become familiar on which side it goes on. So I like to put an add and a deduct, and then over here an add and a deduct. Okay. So the first item is a bank service charge, $24. Who would not know about this? Banker books. Exactly. So the service charge would have been taken out of the bank account, but it's not as yet reflected in the books. So we've got a bank service charge, and that was -$24. Excellent. Deposit in transit. Who would not know about it? Bank. So what is a deposit in transit? This is where, and I deal with a not-for-profit, so this happens to me all the time, I tend to deposit things very late at night in the night deposit. It's not a night deposit box. I just go into the bank, and there's a machine now where you can submit all your checks. But it takes the bank 2 days to process those things because they're not going to give you that money until they check what you have actually deposited. And so what happens is if I deposit something on July 31st, it won't show up on the bank statement usually for 2 days. So this is a deposit that I've already recorded. You got to think that when I did that deposit, I must have done a debit to cash and a credit to accounts receivable because I received money. So I've already done the entry, but the bank has not received that deposit yet. Well, has not processed that deposit as yet. So we have to pretend that they have, so we add a deposit in transit. I'm going to use the short form for it. So deposit in transit is added, $1,575. All right. An electronic receipt from customers in payment of their accounts, $883, not previously recorded by the company. Now, keep in mind that it's telling you it's not recorded by the company. I am never going to do that. I'm simply going to say an electronic funds transfer from customers or just an electronic funds transfer in payment of accounts, outstanding accounts. So I'm never going to tell you that it's not previously recorded. It's never previously recorded. So a very good example of this is when I pay my hydro bill. Hydro cannot know that I paid it until they print off their bank statement because they would have no notification that I'd actually paid because it went from my bank directly into their bank. So an electronic funds transfer is always from customers and it goes directly into the bank account of the company. But the company doesn't receive notification until they print off their statement. And when they do print off their statement, it actually says LSCRAC, and then it says the amount that I deposit transferred in. Right? So keep that in mind when you're paying companies. You're actually paying directly into their bank account. All right. So over here, we've got an electronic funds transfer, and that is $883. So remember, the bank, of course, has already recorded this. They've already put it into the cash account from the company, but it hasn't shown up on the company's records as yet. Outstanding checks, $2,449. Books or bank? Bank. Absolutely, because we wrote them. And at the time that we wrote them, we would have done a debit to accounts payable to pay down our supplier and a credit to cash. And then we mail out the checks. But the bank doesn't receive the checks right away because they have to arrive at our supplier, and our supplier has to actually deposit them. So outstanding checks. And that is -$2,449. All right. Check number 373 was correctly written and recorded by the company as $672. The bank deducted $762 from the company's account in error. The check was written for the purchase of office supplies. I want to show you how I analyze errors. You don't have to do it this way, but I find it an easy conceptual way to do it. If you look at the cash account, it's a wonderful way, debit credit, it's a wonderful way of analyzing errors. So what's the wrong thing? What's the right thing? And what's the correcting entry here? Remember that debit is a positive because it's an asset, and assets are always increased on the left-hand side, and credit is a negative. So if we look at this, we can see that debit becomes deposits. So every time there's an error in deposits, we're going to put it on the debit side. And credit becomes checks. So every time there's an error in a check, we're going to put it on the credit side. Remember that we put the wrong thing at the top. That's 762. We put the right thing at the bottom, 672. I did it on the credit side because it says that this was a check number 373. How do we correct a large credit and making it a smaller credit? We're going to have to debit the account. And for what amount? Is that $90? $90. So notice the $90 is on the debit side and the debit is a positive. So I know that the correcting entry is a positive 90. Now, on whose side of the bank reconciliation do we put this amount? On the bank or the books? Exactly. We always put it on the side of the company that made the error, right? It's always on the side of the company. So we put check 373 error, and we put 90. So this type of analysis, by the way, this process works no matter what we're doing. So let's give another example just to show you. Let's assume that the company deposits $700, but it should have been $70. So remember, that's wrong, and the company deposited $700 and it should have been $70. What is the correction, and whose side does it go on? Exactly. We're going to put $630 over on the credit side, and the credit side is a negative, so we're going to put on our bank reconciliation, on the books, we should put a negative, deduct 630 for an error in a deposit. No matter what the error is, this method will allow you to analyze it. Any questions about this? Okay, so let's go back here. We've got that. So we're at the end of the reconciling items. Wait, I'm going to go back to a different color. Here we go. So this is the adjusted cash. Oops. Somebody want to tell me what the dollar value that is? 8049. As long as it equals at the bottom, we know that we have done it right. So at this point, you got to think that we still have a problem, because if we right now look at the cash account in the company right now, if we look at that cash account, we will see that the cash account per the books is 7190. But that's not what we need it to be. We already know we need it to be more than that because our reconciled amount is 8,049. So I need this account to be 8,049. So what do I have to do? I actually have to do adjusting entries for all the items on the book side. So when I'm looking at this, I actually have to do an adjusting entry for this and this. If I don't do adjusting entries, my bank account is incorrect. And don't forget, the whole focus of a bank reconciliation is to fix your balance in your cash account so that it's complete and free of error. And right now, it's not. So for both of these items, I have to do an adjusting entry. So let's do the adjusting entry in that case. The first is, I'm going to jump back to here. When you're looking at the ad, this is always going to be a debit to cash. The adjusting entry will always be a debit to cash. And when you look at the deduct, it's always going to be a credit to cash. So keep that in mind when you're making the adjusting entries. All right, so my first adjusting entry would be a debit to cash of $883, and of course a credit to what? Exactly, accounts receivable. 883, and now I'm going to put 883 here. Then second entry is to recognize the bank service charge, so this is going to be a debit to, a credit to cash of $24. What's my debit? Exactly, an expense because it was used, consumed, or incurred in order to help generate revenue. So it has to be an expense. So this would be a bank charge expense, service charge expense. I'm going to put service charge expense, $24. And now I have to put the $24 here. You'll notice that now the bank balance is $8,049, and this is published on the statement of financial position because we've actually got verification with regards to this number. Now, I just did these adjusting journal entries, and they are the fourth kind. Remember Chapter 4, we did adjusting entries, and we said that those adjusting entries should never involve cash. Keep in mind that these adjusting entries do involve cash because they are the fifth kind of an adjusting entry, and that is called the correction of an error or omission. So these are still adjusting entries even though they involve cash. Now, setting that all aside, if I did this bank reconciliation after I do the adjusting entries, what would change? I'm going to say the question again. If I did this bank reconciliation after the adjusting journal entries are made, what would change? Exactly. In fact, the book reconciliation, this would all disappear. And this would no longer be this. This would be 8049, and this would be the adjusted cash balance. So there would be no further reconciling items on the book side because we adjusted for all the items. So actually, when we are finished our bank reconciliation and we've done our adjusting entries, the book side of the bank reconciliation no longer exists. The only thing that is left is the bank side. Would you agree with that statement? And do you understand what I mean? Well, don't forget the bank reconciliation is never published. Right? The bank reconciliation is only available to internal users and the auditors. Well, that side doesn't need to be audited because it's gone. I'm not talking about what the bank needs to do, Mark. The bank side is still in existence. The bank side doesn't disappear. Oh, is it even necessary? We still leave it. It's not as if we get rid of it. We don't delete it or anything like that. But do you understand that there's no longer any reconciling items anymore? Because we adjusted for all the reconciling items, so the reconciling items are gone. Okay, thoughts on this? Is it clear what I mean? Thumbs up or thumbs down? Okay, I see a few. Okay, thumbs up. All right, so that means that the only part of the bank reconciliation that we have to worry about moving forward into August, because don't forget, we have to do a bank reconciliation in August, is the bank side. The book side is gone, but the bank side, these things are still outstanding. Even on the next don't forget this is July 31st, so in August, these things, the deposit in transit, the correction of the error, and the outstanding checks, they still all have to be processed by the bank. So we have to continue with this side of the bank reconciliation. The bank side of the bank reconciliation gets pulled forward into the next month, and we look at the bank statement to see if these things have cleared. We still are waiting for these things to be processed. So the previous month's bank reconciliation always gets pulled forward into the current month because we have to clear the bank items which are still outstanding and unreconciled. Are we good with that? Okay, good. All right. Okay, so now I want to do an example where we can show this. I'm trying to find the page that I want. Wait 1 second. There we go. All right, so what we're going to do, it's lovely to do this basic question that we did, the E7-8, but that's a list of reconciling items that were created for us. That's not what a bank reconciliation really looks like. So instead, what we have to do is a complex bank reconciliation like P7-7B, which is a copy that I gave you on the webinar assignment. So everybody's got the webinar assignment in front of them, I hope? And you're looking right now at this company's. I know it's very small. I apologize for how tiny it is. I didn't realize how tiny it was until I just looked at it. It's like mini, mini, mini. I have to change that for the future. All right, is everybody looking at this information? Okay. So you'll notice that the first thing on there is, lo and behold, the bank side of the November 30th bank reconciliation. Why? Because the deposit in transit and the outstanding checks have to be cleared in the current period. If they're not cleared in the current period, they are still outstanding items moving forward into December. So we've got the bank reconciliation, bank side only from last period. We don't need the book side because the book side already was cleared. We also have the bank statement from the company. So we've got all the things that the bank has recorded. And then we have the cash receipts and the cash payments journal from the books. So this is everything that the books has actually recorded. Don't forget that when we do a bank reconciliation, what we're looking at is the items that one entity has recorded and the other entity has not. So if we do a one-to-one comparison between the books and the bank, we should get a list of reconciling items, things that only one entity has recorded. Remember that the very first thing we have to clear is the items from the last period's bank reconciliation. All right, let's start so you got a better idea what's happening. On November 30th, the deposit in transit of $2,530 had already been recorded by the books. The books, when they did this deposit, did a debit to cash and a credit to accounts receivable. This is the books. But the bank didn't record anything because there was a delay. The question becomes, although they didn't record it on November 30th, had they recorded it in December? So we go to December and we look for a deposit in transit around December 1st or 2nd, and it's $2,530. Okay, December 1st deposit, $2,530. So that's no longer a reconciling item because now both entities have recorded it. Let's go back. Outstanding check. Last month, check number 3451 for $2,260 was still outstanding. The supplier had not as yet cashed it. We want to find out is, did the supplier cash it in December? If they did cash it, it's no longer a reconciling item. But if they didn't, we got to carry it forward into the December bank reconciliation. So that's 2260, 3451. 3451, 2260. It is not a reconciling item. Oh, I forgot to put a line through here. Deposit in transit has been cleared. This has been cleared. because you'll notice that previously the books had already recorded this in November as a debit to accounts payable and a credit to cash. So the books had already recorded it, but the bank had not. Now the bank has caught up, so it's no longer a reconciling item. The 3471. 3471 for 845. 3471 for 845 is no longer a reconciling item. 1050, and that's 3474. 3475, 3476, 7779, 80, 82, 81. Aha! We now know that this is an outstanding check. This is still an outstanding check in December. Why? Because we've already recorded it in the books, but the bank has not as yet caught up to us. So this still remains as an outstanding check, and it must be listed as a reconciling item for December 31st. Questions, or are we clear on what I've done? Okay, good. So since I've now cleared, and the very first thing I do, by the way, is I clear the old bank reconciliation. That's the first thing I do. Then you got to think I'm sitting here in the bank statement, and I have to clear it against the company's records. Here's the company's records. So I've got to look at all the cash receipts that we recorded. Remember, this is books. I got to do a one-to-one comparison, and as long as both entities have recorded it, I'm going to put a line through both amounts. So December 1st, 1212. Deposit December 3rd, 1212. No longer a reconcile, or not a reconciling item, not a reconciling item. December 17th, 2954. December 17th, 2945. Ooh, it's an error. I'm going to denote it as an error. I'm not going to analyze it yet. I want to collect all my reconciling items before I analyze it. Oops. Okay, now, on the 27th, there's 2567. 27th, 2567. Excellent. No longer a reconciling item. On the 30th, 1025. 1025. 1025. And then the last one is on the 31st. It's not here. Guess what? This is a deposit in transit. The books have recorded it, but the bank have not. Now I'm going to go over to the checks, and I'm going to do the exact same thing, a one-to-one comparison. 3475 for 1641. 3475, 1641. 3476, 1300. 3476, 1300. 1300. 2130, 3477, 347, 2130. Get rid of that. Not a reconciling item. 538. 538. I do not see 538. Wait one second. 3478. 3478. No 3478. Well, now this is an outstanding check. It's a check that we've recorded, but the bank has not. The electronic funds transfer of salaries, 1427. Whoops. 1427. Here we go. 1427. Then 3479 for 3080. 3479 for 3080. We've got 3479. 3480 for 600. 3480 for 600. 3481 475. 3481 475. We've got the electronic funds transfer 1427 1427. Oh, the other one, I took the wrong one. It doesn't make any difference because they were both exactly the same, but I should have flipped those. I took the wrong one. My apologies. Okay, now this is gone. And 3482, 3482, 1140, 1140, and then 3483, no 3483. This is an outstanding check. Now, let's see what we've got here. I now have a list of reconciling items. I have the deposit in transit. I have the outstanding checks, 2 of them. But more importantly, I also have these things sitting on the bank statement. So I now know that on the 15th, there was an electronic funds transfer of 1345. The bank recorded it, but we did not. I have a return check and an NSFC. The bank recorded it, and we did not. I have a bank service charge of $45. Again, the bank recorded it, we did not. And we've got our error, which we now have to analyze to determine what the impact of the error will be. So let's just analyze this error for a minute. 2945. It's an error in a deposit, so I have to do it on the D side, right? The debit side for the deposit. So what was the wrong thing? Well, actually, the only way you can know what was wrong is to look at the additional information at the bottom. It says one error. How can you tell, in this case, who made the error? In normal circumstances, what I would do is if I found a difference between my records and the bank's records, I would go to the deposit slips because I photocopy all the checks. And so I would look at the actual check and I would be able to determine manually who made the error. But of course, in a question on a textbook, you can't do that. So look at the additional information. They will tell you who made the error. So in this case, it says number 4 under the additional information on your Chapter 7 webinar assignment, it says one error was made by the company. So we already know the company made the error. So in that case, I look at 2954. What should it have been? Go back. It should have been 2945. So we've got a large debit and we need a smaller debit. So what is our correcting entry? What do we got, guys? What's our correcting entry? Credit cash of $9. Exactly. So it's going to be, and don't say credit because we don't use credits and debits on the bank reconciliation. So we've got to deduct $9. So notice we now have, oh, by the way, who's going to report that? Which side of the bank reconciliation will it be reported on? Exactly. Because the books made the error, the books have to owe up for it. All right, so we now have a list of all the items, the reconciling items. This is the list that was given to us in the last question, right? But in reality, we have to create that list ourselves. And don't kid yourself, at this point, accounting systems will accept a download directly from your bank account, and they will do the bank reconciliation. So often, you know, I'll get somebody who says to me, why are we doing this? We know the accounting system will do it for us. Yes, it will. When it has an item, a difference, so for instance, I had a difference of 56 cents when I did my bank reconciliation, downloading it directly into QuickBooks. So that 56 cents, I have to reconcile it. I have to find it. I cannot, if there's a difference, I can't just ignore the difference. I've got to find the difference. And the only way you can find the difference is if you know what you're doing in a bank reconciliation. So it's lovely that computers will do stuff for us, but we still need to know how to do it ourselves. All right, we now have a list of all the reconciling items. We can create the bank reconciliation. So let's do that. We're going to start, of course, with the company name. Name of the schedule. Then the date. This is going to be December 31st. I'm going to say 2018. I don't see the date, but I'm going to say 2018. All right, we got the bank side. And again, it doesn't matter if you do the book side over here instead. I just always do the bank, I don't know why, on the left-hand side. All right, so what do I need? I need the cash balance. What is the cash balance for the bank? 10,395. Do not by accident take 14,368, which is, I'm just going to flip to this. Wait 1 second. So sometimes I have students take this amount up here, the 14,368. Do not take 14,368. I also get students who take this number from the, no, right? And notice 14,368, that was the ending balance from last period. I want the ending balance from this period, and it's always the one at the bottom of the bank reconciliation, 10,395. Now, you'll notice that we did not get an unadjusted cash balance. It was not given to us. There's nothing here that tells us what it is. So we have to calculate it ourselves. So how can we calculate it? Well, if we look at this old bank reconciliation, where would you expect this 12,743 to show up? So the number at the bottom of the bank reconciliation from last month, where do you think that 12,743 does show up? It doesn't show up on the bank side, but where does it show up? Beginning cash. Exactly. Because remember what we said. We said that the adjusted cash balance at the bottom of the bank reconciliation is equal to, and we did this. Remember, we did this in the last question. I'm just going to flip back. Remember how we did, oh, wait. Remember how we did this? Nope, that's not it either. Oh my goodness. Yes, remember how we did this. We adjusted our cash, and so this was the ending balance in the previous month, which becomes the beginning balance in the current month. Let me go back one. All right, so 12,743. That's the beginning balance. What are the only two things that happen to cash? There's only two things that ever happen to cash. We either get it or we give it away. How much did we get and how much did we give away? And where do you find that information? Exactly. If we go to the book's records, we can see that we got 8,955 and we gave away 15,148. We can use that information in order to determine what the ending balance is for the cash, unadjusted. So we got to put in 8,955 and we got to take out 15,148. What is the unadjusted cash balance at the end of the period before adjustment? What do we got right here? 6550. Does everybody agree it's 6550? All right, perfect. So now we have it for our bank reconciliation. And this is the unadjusted. 6550. Now all we have to do is we have to add and deduct all the items from where? For the bank side, to get our reconciling items, we're going to go here. Anything that's circled, we're going to put it on the bank side. For the book side, we're going to go here. Anything that's circled, we're going to put it on the book side. As long as we do that, we will end up with a bank reconciliation that works. So let's just start with the items that belong on the bank side. We've got to add a deposit in transit. Deposit in transit, of course, was 1197. We have to deduct the outstanding checks. Now, often I have students who say, I'm just going to put in the total number of the checks. You can't do that, because you'll remember when we were looking, just 1 second, when we were looking at last month's bank reconciliation to clear these outstanding checks, we used those check numbers and the individual amounts. So you have to list the check numbers and the individual amounts. Also, notice that we have an old outstanding check. that old outstanding check has to be added into our list of outstanding checks. So we got 3474 of 1050. Number 3474, 1050. Then we're going to go back. We're going to get these ones. So this is 3478 of 538. Because we're going to need these outstanding checks next period. And then we've got 3483 of 1390. Now, let's go back, and I want to just double check. I usually like to use a different color. I just want to double check. I got this, I got this, and I got this, and I got this. All the reconciling items have been noted. So now I can go over to the book side and start putting in all the reconciling items for the book side. Remember, I'm going to add or I'm going to deduct. I go where? To the bank statement. Anything that's circled, I need to show up. So first, I've got the electronic funds transfer from our Nishram. Let's do it. Okay, I'm going to add electronic funds transfer. There we go. And that is 3145. Okay, so I got this one. I want the return check, okay, and the NSF fee. So let's do those two next. That's going to be a deduction because the bank took that money away from us. So we've got to deduct it also. So we've got an NSF check from, negative 987. We've got an NSF fee for $40. Okay, now I'm going to jump back for a minute. Okay, I've got this one. I've got a bank service charge of $45. All right, are we done? Error, 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 error. I've neglected the error. Book side, that's a negative $9, and that was in relationship to the deposit on December 17th. And that was $9. Now, if we add it up and we look at the adjusted cash balance, somebody tell me if we end up with the amounts being the same on both sides. 8614. 8614. If we've done it correctly, the numbers at the bottom should exactly equal. All right, final step, of course, is to make our adjusting entries. So we're going to adjust for everything that happened over here. Remember one thing, which is important. When you look at add, that's always going to be a debit to cash. And when you, when you look at deduct, that's always going to be a credit to cash. Okay, we're going to start with the electronic funds transfer. So that's 3145. And credit accounts receivable because the customer no longer owes us anything anymore. And that was for, what was that amount for? That was for 3145. No, I want the name. Yes, here it is. Now, I'm going to put up my cash account so that I can process, and don't forget, we had 3665 as the balance at the start, and so I got 3145 now, because I want to process them at the same time. Now, what's next? I have a credit to cash for the NSF check. Oh, debit first, credit cash, and then the debit is going to be to what account? Exactly, accounts receivable. We're going to put it back into accounts receivable because we're going to hunt that customer down and we're going to force them to pay us again. What is the amount of this? What's the dollar value? that I have to record? Yes. Yes, it is. I don't record just the 987. I add in the $40 service fee because I'm not going to pay that amount. That customer is going to pay for the charge that I was charged by the bank for them having an NSF check. So we're always going to add it in 1027, 1027, 1027. Then next, we're going to have the bank service charge. And this is nice and easy. It's a debit to the bank service charge expense. 45, and a credit to cash. 45, error. We know it's going to be a credit to cash. What's the debit? What are your thoughts on this? Think about what caused the error. No, it's not going to be revenue. Accounts payable, is it? Let's go back for a second. This is an error on a deposit. So remember when I was talking, I have to find it for a second. Oh, no. When I was talking about how to analyze errors. Wait 1 second. Here it is. Remember I said a debit is deposits, and that is always money received from our customers in settlement of accounts receivable. So if there's an error in a deposit, it's going to be accounts receivable. And if there's an error in a check, it's going to be accounts payable. So this is going to be accounts payable, and this is going to be accounts receivable. Oops. One too short. There we go. So that is a debit to accounts receivable for $9. And we're going to do the $9. And if we've done it right, what's the balance here? Well, the balance should be exactly the same as the balance at the bottom, 8614. And if we do the calculations, it's 8614, which is perfect. So let's just recap for a second. What is the value of a bank reconciliation? At the end of a bank reconciliation, our cash value, this 8614, is complete. And it's free of error. It has verification. Oops, spelling is terrible. So these are all parts of the qualitative characteristics from the conceptual framework, chapter 2. And that guides everything we do in accounting. We want the cash dollar value to be complete, free of error, and verified against an external source. And that's exactly what we got. So when we think about it, what have we done? Well, we've followed through on ensuring that our internal controls are strong enough to reduce any opportunity for fraud down to the lowest level possible. All right, we are finished for tonight unless you have some questions. With the increasing amount of digital payments transfers and reduction of checks, are companies going to continue to wait for bank statements to reconcile? Oh, the question is, are companies waiting for bank statements? And the answer is they're not. Companies can download their bank statements at the drop of a hat, and many companies download their bank statements on a daily basis. So they actually download a daily bank statement. So, and don't forget, with the use of digital technology and advanced computer systems for accounting, you can download your bank statement directly into your software, your accounting software, and it will do the reconciliation for you. So it's not like we're going to ignore bank reconciliations, nor do we have to wait till the end of the month to get a statement. But we definitely still have to do a reconciliation, and we still have to do journal entries for the things we don't know. I think it's an important skill to know how to do a bank reconciliation. It's kind of like when I got somebody else to do my taxes one year, and all they did was they typed everything into QuickTax. At that time it was QuickTax. I think it's still QuickTax. But they typed everything into QuickTax, and then I said, because I'm an accountant, and I said, well, have you thought about the fact that you should be giving me the deduction for my son? And they said, oh no, the computer program tells me, right, QuickTax is telling me that deduction should go to your husband. And I said, but the surtax will make it so that it's more valuable to me. And he said, oh no, the computer program tells me. QuickTax is telling me to do this, and that's what we're going to do. So the danger of using a system without understanding what the system is doing is that you actually lose out because you no longer have an understanding of what's going on behind the computer. And so the person who's controlling your actions is actually the computer programmer who probably was not an accountant. So knowing how to do a bank reconciliation is something that I consider incredibly important, because you shouldn't allow a computer to do something that you yourself cannot duplicate. All right. That's it for this evening. Thank you very much for joining me as always. I hope it was valuable for your learning, and I hope it was clear what I was doing. Good night. Take care of yourself.